First things first, we've got two people tonight. We've got Collins and we've got Brian. They're both going to give you some introduction of themselves and what they do in the industry and their experience with leverage and what they have to say for themselves and why they believe what they do. First things first, I can see Brian is ready and waiting. I'm going to ask Brian to unmute if you don't mind.
So I got into trading in my second year of university. So I studied in London, Imperial College London, and I was doing a degree in biology and business management. Okay. And then a friend of mine, basically I saw on Instagram that my friend was making like a lot of money online, and I was like, what is he doing? Right. And then I messaged him on his story. I was like, what is it that you're doing? How are you making like a few thousand, every few weeks? And he basically explained trading to me. And it was something that, was very, very new and very, very different. Until then, I've never heard about anything to do with trading. I never knew what Forex was. I didn't know anything. All I knew about was the stock market. Right. But yeah, in terms of trading, I had zero experience whatsoever. So yeah, it was around about 4 years ago since I started trading.
Interesting. And I know that you're doing your own things now, and you've got your own financial firm, you've got your own education firm. I was looking at your LinkedIn profile earlier. You've done a lot of cool stuff in the Forex markets.
Yeah, thank you.
Yeah, I can see. Yeah, so it's an education firm that you run, or it's a prop firm as well?
So we have an educational side of things. So we do one-on-one mentorship with our students. And then after they've gone through the mentorship program, then they have the opportunity to get funding through the proprietary side of things. So yeah, both.
And before we get into the actual debate, one question I will ask you is the social media side of trading. How do you, I feel like it sometimes can give people a wrong impression. Like it's great to see profits and it's great to see that stuff. But as you know, and as we both know, trading, of course, is fundamentally a hard thing to do. And I think people like to believe sometimes it's a lot simpler than it perhaps is. Do you have the same experience or?
Definitely. Okay. I mean, the way it's portrayed on social media, there's a very, very heavy flex culture when it comes to trading in general. Sure. So when you think of a trader, based on how social media often portrays it, is usually, a guy wearing a Rolex, like that's worth like 100K or whatever, standing next to a Lamborghini that is like wrapped in gold.
Oh yeah. I know this one.
Yeah, exactly. So I think those people that call themselves influencers, right, and that are in the trading space, they often give it, I'd say, a bad reputation, or at least a not an accurate connotation associated with trading itself, because they make it seem a lot easier than it is.
Collins, take it away. We spoke the other day. I had the pleasure of speaking to Collins on interview the other day. Collins is like the most passionate, he's just, well, I'll let him introduce himself. Collins, take it away. Your trading history, your background, a little bit about yourself, if you don't mind.
Yeah, okay. My name is Collins Udolu. Been trading, for the past, 13 years, more than that, and actually, my life. You know how it is, going through the whole bumps, up and down in trading until you gain, high level of, perfection in trading. I'm an EA, and indicator, developer. Getting to that, high level of extending trading, and I've structured myself around, being a time trader, in the market. And so far, so good, actually. And I'm a consultant, I'm a fund equity manager, signal, market analyst, and so on. Favorite pairs, I do more of the British pound pairs, narrowed down to that way in creating that professionalism. So so far, so good with me.
Now, we're having a bit of a debate tonight. I'm going to be like the host. I'm going to be like the judge. I'm going to be like, I'm standing in the sidelines. I want you guys to really, I know you guys are both very passionate about trading. Brian is going to represent the high leverage side and Collins is going to represent the low leverage side. You know what we do here at BluFX. But that being said, I'm being unbiased. I'm being neutral.
I'm going to be talking about, the low leverage, side of this wonderful, debate, and I really want to thank, the whole management and team of BluFX, picking this up. Why is that? I'm going to be, bringing in my personal story, in general perspective of what, the investment, industry is all about, and in terms of, realistic point of view, to what it is that so many people need to learn, out there and understand the scope of what it is they need to understand regarding the capital market. To perspective. There is a little thin line between, gambling and trading. And if you really want to look at it from the gambling point of view, then you're talking about, leverage. I have done all phase of, this aspect of trading, from high leverage, low leverage, settling down to, using the benefit of, low leverage, sizes in building character. So I'm going to be talking more on that and diving a lot more into in-depth analysis on the benefits of low leverage.
Any leverage from around about 1 to 100 up to about 1 to 500. And I think that there's definitely a lot of benefit when it comes to leverage. Leverage is definitely a double-edged sword, right? In the sense that if you know how to use it, then obviously it can work in your favor very, very well, But if you are new to trading and you have no idea what leverage is and you have access to high leverage, right? Then, things can get a little bit messy, right? And personally speaking, when it was my first 6 months of trading, right? I started on £1,000, right? I had a leverage of about 1 to 500. And at that time, honestly, I had no idea what I was doing, right? I was just kind of pressing buttons, right? And through a stroke of luck or through a work of miracle, I have no idea, right? I managed to grow that account from 1,000 to 4,000 in a matter of like a few months, right? Which is a crazy return, right? In terms of percentage anyway.
Right.
And then there was this event, right? And I remember this even till this day, right? I remember this event till this day. So I had my £4,000 account, right? And I just thought to myself, wow, I'm really good at this. I'm really good at trading, right? I'm born to do this. I turned 1,000 to 4,000. I'm like, the next Jesse Livermore, right? And then there was a Bank of England news, interest rate news that day, right? Around about 12:30, right?
Where this is going.
And I can't remember whether or not I was like biased. I don't know whether I had a bullish bias or bearish bias. I can't remember. But what I did know is that I put on like 2 lots, and then it was like it was moving a little bit in my favor, right? Then I was like, okay, you know what? I'll just put a few more lots on, right? Yeah. I was like, when the news release is going to come, I'm going to make loads of money. I'm going to grow my account from 4,000 to like 40,000, right? That's what I thought. And then the news release came, right? And then I looked at my MT4 on my phone, or I was trading with my phone at the time. Imagine that, right? And with my open float, it went from like maybe like plus a few £100 to like plus 3,000 all of a sudden. And then obviously you got that instant dopamine hit. And then literally like 2 seconds later, it went from plus 3,000 to like minus 4,000, and my account just got destroyed. Right. And that was, to be honest with you guys, a terrifying moment because, as I said, it was my first few months of trading. And that was also the money that I used to fund the account was also from my student loan. Right. So essentially, I needed that money to live on, and I just blew all of it on one trade. So yeah, that's my experience of high leverage.
High leverage is not a realistic, a form of trading. It doesn't, create discipline. You're going to be reading, you're going to ride on emotional, basis, because at some point you're going to look at it like, okay, I stand a chance of really, making it so much or making it big. All of a sudden your fantasies, start coming into play, because one way or the other, you actually going to make that money. But how consistent can you be? I would definitely say it's absolutely, zero. You can't be consistent, on trading on a high leverage, a structured account. And if we want to now break it down into, a math level, that is total gambling. Because one, we are not trading, in a controlled environment. The market is not a controlled environment. It's a contested environment. So we can't constantly replicate that same result and over again. Let's just look at it from a logical point of view. You have $100 or $1,000, account, and you're being given a leverage of 1:500, for example. 500 times what? Okay, of your ability going into the market. The market has the capacity of giving you that, but is your account balance having that capacity of, taking so much or swallowing, whatever drawdown that comes, from the market? Absolutely no. You're running a standard lot size. The standard lot size is $10 in the capital market. How many $10 are you going to get out of $1,000? That is 100 lot size. So one, you have to understand the calculation, mix of that. Then you're not talking about pairs. What kind of pair do I want to trade? You just jump into some pairs. Now you talk about spread coming in to take a huge chunk of that, before you're thinking about making money, and most time you want to look at it, okay, where is the market going to go? What kills most traders from that perspective? YouTubers. You see somebody posting on YouTube, man, I just made about $50,000. I'm living a dream life trading. And you think that, wow, that is it. Of course, if you're going to go into that kind of market with that kind of mindset, from the foundation point of view, it's already zero for you. So it's going to be a hell of a journey for you. And unfortunately, that is what we have at our disposal at the moment, globally. If you see any pitching from any brokerage firm, they tell you, we're going to double whatever it is that you've given to you, or you're going to be putting in that account so you can make more money and so on. Automatically, you're going in there with a gambling mentality because you want to triple, double, or even quadruple, an account within a short period of time. Not that you won't be able to do it, you will, but consistently, absolutely no.
Interesting. That's a lot to unpack. Brian, I'll pass it over to you very quickly before we move on to the next question. We've had high leverage described as gambling there, and I'm not going to give my opinion for obvious reasons, but what do you make of that? What do you make of that?
High leverage is described as gambling. I'd say there is some truth and some merit to that statement, to be honest with you, right? But at the same time, right, it's like, let's say, right, with a strategy, you know generally where, with the strategy, right, generally where the market is going to reverse, right, and generally where it's going to go, right, with a very high degree of certainty. So an edge presents itself, right, and now let's say when that edge presents itself, a general area where price is not going to reach into also, and let's say the distance between this potential entry point and that point where the market should not trade up to or down to or whatever is, let's say, 10 pips, for example, right? Or 15 pips, right? Now, let's say you're trading a $100,000 account, for example, okay? And your trading plan says that on whatever position that you take, right, you're always going to take it at an allocated risk of 1%, right? Now, if you're to allocate 1% risk to that position, right, because the stop itself is very, very tight, this is not something you'll be able to fully, you wouldn't get a full position on, right, if you have very, very low leverage. And by low leverage, I'm talking like 1-to-1, 1-to-3, 1-to-5, 1-to-10, etc. Right? But if you had something, let's say like 1-to-50, right, then you would be able to fully execute that trade, So let's say 1% risk on 100,000 with a 10 pip stop on whatever pair it may be is, let's say 10 or 11 lots, for example, right? Now, what you're trading in now is, you're trading within the context of your system, right? And edges has presented itself, and your trading plan states that you should take that trade at 1% risk. And let's say the risk to reward of that trade is 1-to-3 or 1-to-4 or whatever it may be, right? So when you have a strategy, right, that defines a particular edge that should present itself in the market from time to time, right? And if you have a trading plan that states that whenever your edge arises, you will take that trade at 1% risk, right? Even if you employ higher leverage in order for you to be able to access that lot size that is, reflective of that 1% risk, right? Then in that case, I would not say it's gambling.
So put yourself as well in the same shoes of the hedge funds. They're not going to do that. Even no matter how keenly your strategy is, I believe the best form of approaching the market in building consistency, reducing that high level of psychological and emotional imbalance is to stay put, with a low leverage, because with that you're able to have a growth plan.
Why do brokers actually offer leverage? What's the incentive for them? Why do you think they actually do it? Do you think it's for the retail trader? Or do you think it's something different?
I'd like to think that they are the kind Samaritans as you painted them to be, right? But they are not. Right? They are not.
Okay.
The reason why they offer high leverage is pretty simple. I think it's pretty obvious to any sophisticated trader who's been in the market for a few years. The reason why is because it's very, very attractive. They can be like, look, if you put in £100, you put in £1,000, then we give you £100,000 worth of buying power, and we can make you rich, right? Like, Colin's made a very good point. Like, greed is one of the primary emotions that run in the marketplace. Fear and greed. Actually, not even just greed, but fear and greed, right? So why do brokers offer high leverage? Well, there's a rule called a 90-90-90 rule, right? In the trading world, which essentially dictates.
I've never heard of this.
Oh, really?
No, please educate me.
Okay, well, the 90-90-90 rule essentially states that 90% of traders lose 90% of the capitals within 90 days. So let's say, let's say they somehow a broker I'm not going to name brokers on this call, but let's say a broker, right? Broker A, right? Brings in a client, he sells him this dream that, you can buy a Ferrari in a couple months time, right? If you put in £1,000, right? And then he's like, you know what? On top of that, I'll give you some free education. I'll give you some free signals, you can come onto our market forecasts, right? And we're going to make you very rich, man, right? They say. So then, when you first start in the market, you have no idea what you're doing. These people these people are a company. You think they're going to help you. You think they're very kind Samaritans. And so you go ahead, you register, open your account, you select leverage, 1 to 1,000 or 1 to 500, of course, as they recommend, right? You deposit your funds, 1,000, 5,000, whatever it may be, right? And then they start giving you signals and you have no idea what to do. You just know that they said that pound dollar is probably going to go up from this area. So you're like, all right, cool, I'm going to buy here, but buy at what lot size? What's my position size? Where's my stop loss, right? So you have no idea what you're doing. So you're just like, oh, I'll just put on, let's say a little bit, put on 0.5, for example. And then you see you made a bit of money. You're like, damn, these guys work. Right? These guys work. They just made me £100.
I know where this is going. You're talking to me.
I just grew my money, right? Sorry. So then they're like, well, if I use 0.5 lots and I made £100, then what if I just use 5.0 and then I can make £1,000? I just double my money. So that is the thought that goes into the mind of a novice trader. And I say this speaking from experience, right? I went through this exact same cycle, so I can tell you now that this is not some story I found online. This is my story, right? Exactly. It's like Wolf of Wall Street. It's literally Wolf of Wall Street. You guys watch Wolf of Wall Street? It is exactly that. They are selling you, for a lack of better words, crap. Right?
Dream, fantasy,
right? They're trying to sell you a fantasy, right? And they don't really care if you actually get to that fantasy, right? What they care about is that you're depositing money and then you're trading, right? Whether you're winning or whether you're losing, they are still winning.
You can see your charts, right? Like what I have behind me. It's a whole lesson in its own trying to understand that. But what do they sell? They sell you the dreams first, because that is the main paramount thing why you want to trade money. So now they look at it that, yes, do you want to really make money fast? Then come join in. If you're looking at it, in the world of gambling, okay, wow, Chelsea and probably, one of the small clubs, probably, Bolton, they're going to be playing. You're going to look at the track record of Chelsea. Now, Chelsea is really going to win. Let's go straight up to the bet pool house. Okay, this pool house is ready to even give you times 10 of whatever it is that you're going to be putting in, because they feel that, yes, Chelsea is going to win. That is for the football sake. We talk about, even trade manipulations. We talk about structures. So it is quite in-depth, really understanding, the whole framework of trading. The manipulative aspect of trading comes as a result of the dream that has been sold. But trust me, these areas is only sold to newbies environment or intermediate market environment. Brokers will never sell this to a professional trader. If they're even selling that to a professional trader, the right questions are going to be asked from that perspective.
Gentlemen, Brian, Collins, thank you for sharing your story tonight. Thank you for having this debate. It's been a great evening. You've given a lot of value. I know that you're inspiring a lot of people watching. Gentlemen, best of luck with your trading. All the best.
Thank you.
And Brian, especially, best of luck with the house move. I'll let you get back on with that.
Thank you. Oh, yeah, I'll start unpacking now.